What's going on, Hustle Nation? Today we're going to be talking about an ETF that can maximize your returns while minimizing risks, okay? We're talking about the Vanguard 500 Index Fund, or VOO. Also you can do the S&P, the Spiders, SPY, but this one here has a little bit of a smaller expense ratio. So what these ETFs invest in basically is the S&P 500 Index, which is tracked by, which contains the top 500 of America's biggest and strongest companies. So why the S&P 500? Okay, S&P 500, you hear a lot of people talk about diversifying. It's automatically diversified. It's got several different sectors, several different industries. We'll take a look at that here in a second. So the S&P 500 index has beaten most fund managers, depending on where you get your information, 80–90% of all fund managers in the history of time. And it's easy. It's a passive investment because as companies get bigger and better, or they get weaker and less better, they get moved in and moved out automatically. So it's more of a hands-off approach, right? I wouldn't say passive, but hands-off approach. And another good thing about this is that it is held also by some of the best investors, like Warren Buffett. He holds the VOO as well as the S&P, as well as the SPY. So he holds almost, as of this writing, 0.85%. So almost 1%. I mean, not a lot, but still it has his stamp of approval. And he does speak about, if you don't want to do anything in the stock market, if you don't care about researching this company, researching that company, a simple approach to invest is just get this S&P 500, just get this one index ETF, exchange traded fund, and track the index of the S&P 500. I mean, very, very simple, right? Very simple approach to investing. Very, it's not 100% safe. Of course, it goes up and down, but the average return is 10%. Now, you're not going to get 10% every year, right? You might get some during the boom cycles, might get less during the bust cycles, and it does fluctuate. And sometimes you're like, why am I even doing this? But the average return is 10% a year. Okay, so let's take a look at this ETF. So net assets, $285 billion, so there's a lot of liquidity in there. So the net expense ratio, according to Fidelity, is 0.03%, which is very, very small, right? The dividend yield is not very much, about 1.5%, 1.6%, but the growth is what you're wanting. The inception, you can see it is growing quite well. You have your dips, right? 2020. You have your dips, 2022, of course, last year. It's up in 2023, so it's pretty good. So 5-year period, it's up. 10-year period, it's up. Maximum is up. So, it's a pretty stable index fund as far as American companies. So what companies does it have in there? Let's have a look-see here. So the top 10 holdings: Apple, 7%, the biggest holding. Microsoft, doing really well. Amazon, Nvidia, and then it starts going into these lesser holdings. Alphabet, which is Google, Tesla, Berkshire Hathaway, Google Class C, Meta, formerly known as Facebook, ExxonMobil Company, a corporation. It's got big names like United Healthcare, Johnson & Johnson, JP Morgan, Visa, MasterCard, Home Depot, Chevron, AbbVie, all the big names, Pepsi, Coke, Costco, Cisco, Walmart, McDonald's, Bank of America, all the big names, right? All the big name companies that you're probably familiar with in America. So you know that those names are legitimate and that they're the biggest, strongest companies in America, right? So let's take a look at the sectors. So the returns, okay, so the returns on this is 1 year is down, 3 years 18%, 5-year 11, 10-year 12. The life of the fund is 13%. So, I said 10%, I read that somewhere, but according to this, it's 13%. So not bad at all for a lifetime of the fund. Analyst rating, everybody says it's an A. Very efficient, very tradable and fit, whatever. Not really caring too much about that. So the ETF tracks the performance of the S&P 500 index, like we said, right? Passively managed, and it's the biggest companies. So we talked about the holdings. Top 10 holdings comprise of 27%. North America, of course, it's got a couple of Asia and Europe. I didn't know that, but okay. So we looked at all the holdings sectors here. So the biggest sector is information technology, which comprises of 25%, 26%. Then healthcare, financials, consumer discretionaries, industrial, on and on and on. So it is a well-diversified fund. It's a well-diversified fund having exposure to many different sectors. Okay, and here's the full listing. Okay, so all the way from IT to real estate. Okay. The industry exposure, you got software, you got technology, hardware, storage, you got semiconductors, you got media services, financial services, oil and gas, pharmaceuticals, banks, healthcare, I mean, retail, capital markets, biotech, insurance, hotels, cars, electric utilities, beverages, life sciences, chemicals, machinery, aerospace and defense, household products, all of this stuff. So you're well diversified just getting that. If you wanted to do nothing else, you would probably be safe investing in the S&P 500. Okay. You'll see that the dividends are low, but it's not for, dividend investing. This is for growth. Okay, so the growth that's the hypothetical growth. We don't care about that. Moving average of total returns, you'll see that we just talked about. Quarter end average total returns before taxes, after taxes. Everything is good, right? The life of the fund, 10 years, 5 years, 3 years. 1 year it's down, no problem. We're talking about long-term investing, right? So 36% of institutions own this, and then 62% of the rest of us. So it's owned by a lot of people like you and I, you and me, whatever. So the net expense ratio, 0.03, like we said. Let's see, price to trailing earnings, 20.63. Some people say that's a little high, but you pay for the best. Historical growth, 15.77, pretty good. We don't, but history doesn't dictate the future. Net assets, 285.4 billion, so very liquid. So there you have it, guys. A quick rundown of the Vanguard S&P 500 fund. Give me a like for the YouTube algorithm. Subscribe to the channel. Hit that bell notification. Forward this to somebody who's interested in investing in the stock market, who doesn't really care to pick their own stocks, right? Very simple, effective strategy to invest without having to worry and deal with the day-to-day ups and downs of the stock market. So, as always, thanks so much for watching. Really appreciate you guys. I wish you much success in your finances and life. Peace out. If you like the hustle gear like this shirt right here, check out my store. I'll leave a link in the description below. Or you can go to gearforhustlers.com. It'll take you to the website here to get your favorite gear. Really appreciate it, guys. Peace out.